Hello guys, for today we will see good news. I understand a lot of you guys, when they see the market, when I explain what's going to the market, they are always mad and angry. I say whatever stock we buy, it goes down, and this is because you don't focus on stocks that makes the money. Okay, in a troubled market, when the market is not going anywhere, not going down, not going up, and it's always trending into a range, I have always find stocks. Either in a good market I find a lot, in a bear market I find a few, but this is daily. This is because of your search. Now let's go and check the first. Now, small stocks don't follow the general mood of the market. Now let's explain first what is small stocks and why they don't follow the mood of the market. Okay, so when we speak about small stocks, I don't mean penny stocks always. Penny stocks, because most of the penny stocks are, let's say, under $5, $2, $3, $5. But you can find $10, $15, $20, $25. All these are called small stocks. If you, for example, if you have small account, 5,000, 7,000, 10,000, 15,000, this is a small account. If you go and you want to buy bigger stocks, though most of the bigger stocks follow the big trends, follow the big indexes in the market. For example, the Dow Jones or S&P 500 or Russell 2000, all these kind of stocks. Okay, when they are big, they generally follow the big market. Now why? Because a lot of analysts are always analyzing things and giving a buy opinion, or they say sell, or they say hold. So always the people are confused, and these stocks most of the time they follow the whole general market with the indexes. But smaller stocks are different. They are bought by, let's say, small mutual funds, small hedge funds. It means they don't have very big volume, and generally most of the day traders, they don't go to those small stocks. Okay, I'm speaking about big day traders. Okay, because in order to find big opportunities, they should find the news, they should find analysts are going to speak about them, to speak about their company news. A lot of stuff is happening because all the market is focusing on these kind of stocks. But smaller stocks, no one talks about them. Okay, and analysts, they are not interested. Why? Because the whole stock, there is no money in it. Okay, let's say stock is $5 and it is traded like 50,000 a day or 100,000 a day. It is a very small stock with a very small volume. Now analysts, they want bigger stocks in order to make money, because, you know, as I told you before, understand that the whole market is a conflict of interest. Each one is pushing the thing that makes him money. If a company feels that the stock is going down, they can ask an analyst to give a good review of this company, in order that a lot of people, they invest in the company, or mutual fund, they come and they invest in the company. It's always conflict of interest. Okay, they don't care who buys or who sells. The main important thing is their stock is going up, because the company will have a proof that it is doing very good. Okay, so as I told you, small stocks don't follow the general market. Right now, in all these 2 months, okay, you think that all the stocks are going down, which is false. As I always told you, that the whole market, it doesn't mean that everything in the market is going down or going up. No. Okay, so you will find stocks daily, and these stocks are small. $15, $10, $7, $25, all these are small, and they can bring you a lot of money. So let's go to the second one. Okay. Excuse me. So the second one is, let's see here. So the second one is smaller stocks move, okay, faster than bigger stocks. So what does this mean? Okay, so a lot of you guys have seen this and you like it. You see a stock $2. After 15 days, 20 days, it goes to $7, $8, $10. If the stock is $2 and it can go to $10, what does it mean? It means if you buy it at $2 and it goes to $10 in 15 days or 20 days, you will have made 500% of your money. If you put 2,000, you will get 10,000. This is true. This is what the people are doing in order to make their money. You don't go to a stock that it is $100 a share and you like it, and you buy 5 shares or 10 shares and you tell me I am trading. You are not trading. You will never make money with bigger stocks if you have small account. So try to respect yourself. Okay? And it is better for you to buy smaller stocks that run faster than the bigger stocks. Okay? And this happens always. And it happens daily. Why? Because the smaller stocks are moved easily. This is why. Why the small stocks are moved easily? Why a stock is $10? Is like $10. After a few days, you find it $15, $17, $20. Why is that? It's just because the number of shares that this company has is limited. It is small. When a lot of guys have money, if they buy a lot, the stock will move up by force of buying because the shares are few. Understand that the companies are not the same. There are what we call very big companies like blue chips who have millions and millions. Some they have maybe billion of shares. These companies are so big. Okay? But you find smaller stocks that are just the whole capitalization. It means capitalization, it means if you want to know the capitalization of a company, when you go to Yahoo, for example, it will give you the capitalization. It means the number of shares or the common shares that are in the market, you multiply by the price. You will find the capitalization of the market of this company. Some you find 500 million, 1 billion. Okay, it's very, very small, this company. Okay, and then you find medium companies, and then you find bigger company with let's say $400 billion. Okay, so you find big companies and you find very, very small companies. Small companies with fewer shares, and there is a pressure of buying, they go fast up. And also they can go down fast. That's why they are opportunities to make money in the market, in any market. In any market it happens. And those buyers, they are not the same buyers as big companies. Now, if someone, let's say a mutual fund, wants to buy, he doesn't go to buy a $5 stock. $5 stock with 50,000 volume today is a very, very small company. If he wants to buy it, to begin to buy, he can buy it. He can buy the whole company. Okay, just what is left for the holders. Okay, so they are not interested. Big mutual funds, they are not interested in smaller companies, except when they are becoming bigger and bigger and they have a huge or millions and millions of shares, and the capitalization becomes bigger and bigger and bigger. 5 million, 10 million, 20 million, 30 million, and then the bigger mutual fund get interested to these companies. But before, no one is interested in this, because you will find a stock that it is $1, $2, and it is traded at with a 20,000 volume or 50,000 volume. It's very, very little. It means even the money in the stock when you want to buy and to sell is very, very little. That's why if a lot of people, they come, not big mutual fund, but small one, or small hedge funds, or small for those guys who are having millions and they want to invest in small companies for the long run because they know this company or they know what they are doing. So the companies can go faster and faster up, and this is an opportunity for us to make money. But you don't have, for example, $5,000 and you are going to buy Facebook or Apple, or you are going to buy Amazon or Google. Okay, you buy a few shares and you say, I am investing. This is not a trading, and this is not investing, because you have small account. So smaller account, you can buy $5,000. Okay, if the stock is $10, you can buy 500 shares. Okay, 500 shares. If the stock moves only $1, you get $500. So you see how the money is coming. Even if you buy $2,000 only, okay, and the stock was $2, if it goes to $4, you will have 100% of your money. So from $2,000, you get $4,000. So your profit is $2,000, and it is 100%. So all the people who have smaller accounts, or even if you have big accounts, you can make a lot of money from these small accounts, small stocks. Okay, so now the third thing I want to mention in this, the third thing I want to mention is let's see here. The third thing is you will find daily stocks if you use my criteria. Now, what does it mean, this if you use my criteria, you will find daily stocks. Okay, I understand for you guys, there are some of you who have experience, who have been buying stocks for many years. Either you make money or you don't make money, it's your problem. Okay, but for me, I'm trying to help as much as people who want to learn my own strategies. Okay, so with my criteria, you will get daily stocks which are small, whatever stock you want in terms of price. You can decide that. Let's say under $20, all the stocks are under $20, or under 10, or under 30. You will find all these stocks daily. Now, if the market is good in some days, or in 1 month or 2 or 3, you will find hundreds it becomes too much, too many stocks. And there is someone who was like taking my training, and he told me, I want to know not to miss any opportunity. I say, you can't. If you find, for example, today, you find 200 stocks, and then you find 20 good stocks according to my criteria. They are very good charts. They met my criteria. Now, can you buy all these 20 stocks? No, you can't. And tomorrow we have another 20 stocks. The other day we have 20 stocks. So why is that? Because stocks doesn't go in one day. When the momentum comes to a stock, you should buy it in the same day you search. You don't leave a stock from $2. Tomorrow it goes to $3, and then you buy it at $3. Okay, so you lose $1 if you didn't buy it on time. And this is called the momentum. And this is my criteria that I'm using. Now, if you have good criteria and you are buying small stocks and it's good for you, okay, continue with that. But if you find a difficulty or you don't find those stocks, you can try my strategy. Okay, either you can do the silver subscription, or you can buy training level 2 or 3 or 4. This, it gives you how to search, how to find stocks, what are the criteria, what are the good charts. Training level 1 is for free. As always, you can get it whatever you want. Okay, these are the basics. These are just to find the stocks. Now, when you practice, you search and you practice daily, and you put in your portfolio, and you try to see what is my general understanding and how I pick stocks, and then you can go to the next level. Okay, you try to study how to put stop loss. You try to follow how to follow the trend of each stock in order to make more money and to manage your account and the other stuff. All these are in the 10 training, from training level 1 to training level 10. These are the basics. And then when you know the basics, you know how to trade, you begin to do good, you practice, and you begin to see the money. And then you can go and you buy from support line. You can go and you do a short strategy, just a few days, 1 week only. You can invest for the long run if you want. You can see other training. You can fix all your problems. Okay, if you want, if there is, for example, in the market there are some indexes that are going down, you short the whole indexes. It means you will be aware of everything is done in the market. But if you stay just with these stocks, it is a very good thing. And before, I had made many videos explaining how to make thousands of dollars of these small stocks. This is a true reality. It's not something, I'm not saying from $100 you will make $1 million. Okay, I am not with that, and you know that. And if you are following these guys, you can continue following these guys. So I don't care about what the other people do. But try to be logic, okay? And if for example, you say to me, oh, what are these stocks? I don't find, show me an example. Okay, send me an email. I will give you examples of these stocks that are in the market. Okay? That are always in the market. But you should, in order to find these stocks, you should practice. Use the criteria and practice. Because picking the stock is a skill. What we call a trading skill. Or you can, for example, if you want to, you can use my training level 3. You can put all the stocks that you like, and you apply my strategy, my criteria. Whenever these stocks in the same day, at the end of the day, whenever they met my criteria, you buy them. Okay, this is another opportunity for those who likes some stocks. For example, you have 10 stocks or 20 companies that you know and that you want to trade. It's good also, because for me, when I trade, I don't care where are these stocks, which sector, okay, which sector or which industry. All the market is good. When you find a stock, it's going up, you make money, that's it. Okay? And understand that there are many sectors, many industries, and you should do this and you should practice. If you are not certain, you can practice in a virtual account, or you use my chart and you just practice. You buy at a certain point, you put stop loss, and you follow the stock for 1 week, 2 weeks, 3 weeks, and you see as it is real. This is what we call virtual account. It means you can use just the chart, put stocks as I do, and follow them with my criteria. Okay, I'm not speaking about your criteria. If you have your criteria, you use them, and you don't need my own criteria or how I find stocks. But it is better to choose to see what other traders are doing. For example, for me, okay, this is my way of making money since 2010. I have never done another thing than that. Okay, that's why I'm teaching this. Okay, if it doesn't work for me, I would never teach it. I would never taught it. Okay, so the best thing is to try another thing. If you continue doing the same mistakes, and it will never, your score or your performance will never change, because you are using the same criteria, the same mistakes, and you want results. It's just because you go to someone else or wherever you want, and he tells you, oh, buy this stock, this is the 3 stocks of this month, buy them. We are not going to work like this. What if that stock that he told you to buy is going down and it has catastrophe? What do? You will be losing a lot of money. It's just because. Don't buy stocks because of the fundamentals, or because of fundamentals. It means you see the company, you see how it works, earnings, and this is for investing, not for trading. So don't mix things. Don't take tips to buy stocks just like that, and you think they know better than you. If they teach you how to search for these stocks, it's okay, it's good, because you learn how to do it by yourself. For example, for me, I am not taking the information for myself, but I give it to you as a training, and you train, and if you have problem, you ask me why is that and why is that. And this is the good thing for my students. They always send me stocks, they always ask me questions, they are always learning from me, and this is how the training will work. Okay, so thank you very much. Please, if you are interested, just go and check training level 2, how to search for stocks using stock screener. If you are an international student, you are not from USA or from Canada, there are some other stock screener that I use for international students. Please send me an email, and I will send you the that stock screener. Okay, and it is in my training, and you can find stocks in your country. If you are international student. If you are from USA and Canada, the chart and my stock screener works for Canada and for USA. Okay, so thank you very much, and please subscribe if you haven't, and share my videos. Thank you very much. See you tomorrow.